All right, everyone, and welcome back to Trade Wave Tuesdays. So, what we're doing every single Tuesday here on the Trade Ideas channel is we're using a new indicator that we have built that uses a series of moving average on top of price action to give buy sell recommendations for any stock that is out there. So, what I want to show is how I am trading this and how I would trade this on a little bit of a slower pace so you guys can kind of keep up as well. So I'm paper trading a portfolio where I'm taking $100,000 portfolio. I'm splitting it into 10 equal securities. We are buying when the trade wave tells us to buy, and we are holding until this moving average cloud breaks down. So let's take a quick look at what we've done so far. So there's been 2 weeks you can go check out on the channel, but the first one was UNG. We bought a little bit right here at 1432, and the reason for that is we had a buy signal right here in trade wave, a little bit of pullback, and when it broke that high, we got in. So far, we just need to look every day. This is one of the benefits of being systematic when it comes to your entry and exit. I don't have to do a lot of thinking here. I have to look at it. I have to say, is it above the cloud? Okay, I hold it. Next one here is JD.com, which is a Chinese name. We bought this last week, right here on this day at 27.26, because I liked the look of the China ETFs totally. It had a nice rounded kind of bottom right here. And I said, okay, I'm going to take a little bit of shot on this. Now, we know that when we're doing trend following like this, we are going to be uh, wrong more often than we're right. That's just going to be the way it happens. It's when you're trend following, you're going to have a sub 50-50 win rate if you just completely follow a system. But you're going to make way more than you're right than when you lose when you're wrong. So what I'm doing on top of this is just adding a little bit of technical analysis to the trade wave indicator to kind of pick out stocks that I like for some reason or another. So those are two names. We are currently up so currently up about 4 or 5% on the portfolio. The idea is every kind of solidified, realized 5% gain, we are going to up our position size. That's going to be something we talk about in a future video, but it's going to be how to grow an account while keeping our risk constant by upping that position size again. So next, uh, I was looking through this scan that we're building. This is, for you guys, early adopters. Uh, Not done yet, but under the Market Explorer window, if you go select strategy, you can see that we have a trade wave test in there where I'm going to test this for a few more days and then we're going to push it out kind of live. It's a little bit ugly right now. I'm going to clean it up and do some things, but you guys can check it out. And I saw CLF. So first thing I like about CLF is we kind of undercut this low here at about 1230, and now it looks like we're gapping back through it. The other reason I like it, if you take a look here on the monthly chart, which is behind me, but I'll just switch to it real quick. If we go to the monthly chart or a longer term chart, you can see this is a pretty significant level here at this kind of $11, $12, and that seems to be reversing there as well. So I'm going to add CLF to the portfolio. There was a lot of names in here that looked great that were from China, but as you can see with JD.com, China pushed as well. So part of what I want to show you guys is again how I'm going to manage this as a portfolio. So if we end up getting too weighted in certain sectors, right now we have one from China, we have UNG, which is natural gas. CLF is going to be another resource play. So next week, I'm probably going to try to get away from that resource sector, try to find something a little bit more techy that's setting up because again, we want to diversify out. So one move in fundamentals in some sort of industry, say we're all in China, for example, and something bad happened over in China, that would crash the whole portfolio. So we're trying to spread this out because again, we're not trying to make $1 million and all drive Lambos, and that would be great if we can do that. This is about how we are responsibly and systematically growing a portfolio over time, knowing there'll be some good times, there'll be some bad, it's just kind of the way it works. So let's go to CLF here. And we're going to make sure that we have TradeWave Tuesday selected as our account. I'm just going to buy, and we are buying $10,000. Did I do 100,000? Hold on. 10, 1, 2, 3. Yes, 10,000. And then I can select dollars right here. And we'll hit buy. And then we just scroll over to the send button. And then we will hit send. And now you can see CLF has entered the portfolio at 1275, give or take. You know, the thing I love about this is that the clouds right here is if we break and close below 12, that's probably going to be our out because that's where the moving average clouds sit right now. If this continues to work and we get some sort of move up to 14 or even 16, again, that's that good risk reward play. Focusing on this long-term chart, we can go to a weekly chart or we can go to a monthly chart, and we can see that this area has been pretty important right back here. So this has been a pretty important area for a long time. Call it, 14 down to 12. That area has been a pretty significant area. So if we can reverse this and start to push higher, then even the top of this range, 2022, ends up being good risk reward play because that's what we're after. We know that trend following, we're going to be right about half the time, maybe a little bit less. Uh, but that doesn't matter because when we're right, hopefully we get a couple names like JD.com where we now have a lot of room for this to come back and hit our stop loss and still profit, a lot of wiggle room for it to go. And if this is the bottom of some sort of cyclical kind of China play, then we can have a big move. So that's what we're looking at this week. It is CLF. Next week, we'll again look a little bit more in the tech sector, maybe in financials. We'll try to kind of get out of this this more resource heavy thing that we're falling into. So see you guys next Tuesday.